Welcome back to the channel. All right, today we have a lot to talk about. There's been a lot of interesting developments in the market, so I'm just going to start this off by saying the usual. Like the video, subscribe to the channel, and check the description for social links and all that stuff. Now, as far as the market goes, a couple of interesting things have happened. All right, the first being what everyone is probably looking at, which is Ethereum. Ethereum has been just exploding in the last few days, and we're going to take a look at exactly, what this explosion in price means for the price in the short term. I mean, you would think that at a certain point in time, Ethereum has to correct, right? You would assume a correction. You would assume that some people would take profits, but we haven't seen any of that happen yet. So we're going to look at some levels and try to figure out where we think Ethereum is going to drop. So we'll take a look at that. Bitcoin has been fairly stable. So we'll take a look at the targets we had put in last time and what kind of timeline we're looking at. The timeline that I'd put in before for the small spike and the large spike still seem to be accurate, and actually these look like pretty decent targets still. And this was done about a week ago or a week and a half ago. So we'll get into that as well. With EGLD, basically what we're going to see with EGLD is that it's following Bitcoin very, very similarly. And now what does that mean for EGLD, and what do the EGLD levels look like? Because the levels on EGLD are looking very interesting, as well as the spike in volume we've seen over the last 24 to 48 hours. So there's definitely been a significant spike in volume that has driven the price up. So we'll take a look at that and see how that relates to our support levels. With Cardano, it's been staying pretty stable. So we're also going to look at any new patterns we see with Cardano. All right, so that's the brief overview. Let's go ahead and get started with the Bitcoin chart. Now, I've made a few changes to the chart. If you if you look in the description, you'll see the links to my chart. You can link to them anytime you want. And there's a couple of things I've pointed out here. All right, one of them is, I've labeled these different zones, so you can look at them and know exactly what they are. The first one is the resistance zone. This is the zone that we've traded on for a very long time now, since early February, and basically we are now hitting resistance at this zone. We predicted that when we had first dropped back into the zone, that we would go into the support zone, we would get support, we would trade in the center for a little while, and then we would come back into the resistance zone where we may hit resistance before we break out. That's playing out pretty well right now. I mean, you can see we are just chilling right at the top of the resistance zone, and it looks like we're actually flipping that into support. So that's very interesting. Down here, you see this new area. This is called the golden pocket. Now, the golden pocket, if you're not familiar with it, it's a very specific range within a Fibonacci retracement. You know what? Let me pull up the Fibonacci to show that to you so it makes sense. All right, so let's go to all my fibs here, and I'll just have to see exactly which fib it was. It's not that fib. Okay, so this is the fib. This is my Fibonacci retracement for the short term. So you'll see possibilities. We can turn those off. Let's also turn off the indicators. Okay, so now we're looking at just the Fibonacci. I'm also going to turn off the TD sequential, and I've already turned off the moving averages. So this Fibonacci should be easy to look at. Now, basically what I've done with this Fibonacci is I've picked a local low. All right, so this is the local low that I went with. This is on February the 28th. I've chosen that as the low point of this Fibonacci, and then it's gone right up to the top, to the high point. Now, this area between the 618 and the 786, there's a new line that I've put in there. Basically, what you do is you create a little gap between 618 and 0.65. Now, this line is referred to as the golden pocket, and usually what happens with this little area here is when the price reaches a certain level, your golden pocket is usually the area where you expect that to be some kind of a bottom. You expect that if the price goes back to the golden pocket, that's probably when you're going to have a reversal. So in a sense, what you saw here kind of validates the golden pocket. A lot of things validate this as the golden pocket. The first is that even if we extend this fib back, there's been a lot of trading in this range. And right now for Bitcoin, this golden pocket range is between 51,300 about, and at the bottom, it's about 50,600. So it's about a little less than $1,000 range. Now, in this area, basically what we are seeing is that there's been a lot of reversals happen. So the price hit here, it reversed down. The price hit here, and then it bounced up. The price hit here, and then it bounced up again. We also came back down below this area, and we turned it into a resistance, and then we broke through it. So there is a lot of merit to this area potentially being the golden pocket. Now, you can always change the golden pocket, and the way that you would do that is you would take this back to a prior low. So if you were to unlock this Fibonacci retracement and go back to a longer term low, now your golden pocket is reduced. So it's between 41,000 and 42,000. So I would look at this golden pocket and say that this is probably the maximum bottom. If Bitcoin was about to correct again at any point in time and it falls through the shorter term golden pocket, then we would definitely expect a lot of support here. Now, the interesting thing also is if we take a look at the indicators, that this is below our support zone. So basically, when we're looking at this chart, if we ever see us fall below the support zone, this is where we would be expecting support. Now, instead of looking at it this way, I prefer to look at a slightly shorter term. So what I'm looking at is this here. Okay, this is a shorter local low up to our high, and now we have a golden pocket. All right, that golden pocket, like I showed you, is exactly where I've put this orange bar to map it out. So now I can turn off the fib so we can look at these levels. So now pretty much what we're looking for is to flip this area. And I'm gonna go back to one other thing. I'm gonna put those wedges back in for anyone who's concerned about the breakout ranges. So we'll put these wedges back in, and pretty much what we are looking at here, these two ranges are giving us potential breakouts on analysis we had done previously. Now, if we take these two levels, what's seeming to look more likely is that we would come back and retest at a certain point before we move further. And the reason I say that is if we look at Bitcoin on the daily chart, one thing that's very prevalent about Bitcoin on the daily is that Bitcoin just did in the MACD what is something very interesting. So on the daily chart of Bitcoin, keep in mind, this is the daily chart. If you look down here at the MACD, I'm going to try to zoom into this a little bit more. If you look down here at the MACD, what's happened is the blue line has now crossed over the orange line. So this is called a bullish cross, and this happened below the zero level. So this happened in the red area of the MACD. Now, if you go back to the previous history, let's find the last time this actually happened. So we go back here, you'll see this is the last time it happened. It was September 14th, 2020. So let's go back and see what happened the last time this occurred on the daily chart, okay? The last time this occurred on the daily chart was roughly here, okay? So we'll take an ellipse and we'll put the ellipse within this range. So basically around here. So this is the area where that cross occurred. Now look what occurred in the price after this cross occurred on the bottom, under the zero level of the MACD on the daily chart. All right, keep in mind, this is at a much more macro time frame. So we see that the cross occurred, and then within a month, the price started running sideways and then bursted up. This cross here was basically the first indicator that we have now moved into a bullish time frame. After that, it consolidated a little bit more, and then the price just ran. It literally went from around 10,000 all the way up to 20,000. It had a 100% increase in price. Now, there's no guarantee that this will result in another 100% increase. It's a possibility, but we don't know how fast that would happen because now the market cap is much higher, the price is much higher, so you're not gonna be seeing the same amount of volume coming in. I mean, it's unlikely. But the fact that we are now, for the second time in a year, seeing this MACD cross occur, I think that's a pretty big signal. And I think what could happen is we could have a little bit more consolidation here, because if we look at this area, we're still getting slight resistance at the top of this resistance zone. Now we go back to the 4-hour chart and look at the more micro level. On this level, what you see is that this actually looks like it's starting to flip this area as support. It's not confirmed yet. But basically what I'm thinking that we'll see is if this does hold as support, we'll start to see a run up. All right, we'll start to see a run up fairly slowly because now Ethereum is gaining a lot of market cap. All right, and Ethereum may play into this as well, because if Ethereum starts correcting, I think we're going to see a lot more volume come into Bitcoin. So as we start seeing this go up, this target is definitely a possibility because it's also going to hit at around 65K. It's going to hit this trend line that we have. Then we could see it flip back down, hit support here. Thank you, Fiox, for following. I appreciate you, man. Next, if we come back and hit this resistance zone, we could also then move back up and start hitting into the 70K range. So something like this, if you look at it now, when I put those in, and then you look at this in the overall chart, this seems to make a lot of sense, right? Because especially if we start to see a drop in Ethereum and people transferring their money over to Bitcoin, seeing a rise like this is very possible. But there's no reason that Bitcoin and Ethereum can't rise at the same time. You could just have a flood of people wanting to get into crypto again. Some news comes out and this spikes, or just overall price appreciation because the volume in Bitcoin has been dropping. So once that volume comes back, it could just spike up. So the things I'd be looking out for in Bitcoin right now is how does it interact with around the 57,000 mark? If it holds 57,000 as support and it breaks past around 59K and starts going back into 60K, then I would look for another slight drop once it hits around 65. That's what I'd be looking for. If we start seeing a drop from here, so if the price reverses, the two levels I would expect support on, or a reversal for it to go back up, is around 53 to 54,000. So anywhere in that range. If it drops below 53, then it may hit the golden pocket. And if it hits that golden pocket, that around $50 to $51,000 mark, if it hits that area in this chart and we see it reverse there, that's a signal that the price is getting ready to really start a run up. And that would also make sense. Everything would fit with the MACD cross we're seeing on the daily. So those are the main points to look at for Bitcoin right now. It's been fairly stable lately, so we just have to keep watching it and see what happens. But I feel like once it goes past 70,000 now, or even 65,000, the chance of it going below 60K again are going to be unlikely, right? We're probably, the next phase of this, we're probably going to see Bitcoin cross the 70,000 mark, and then any corrections would hit support at 60,000, and then we would start putting in new support volume, and it would basically start looking like this, right? We'd start adding more volume into this entire range. All right, that's pretty much it for Bitcoin. Pretty quick. If you want more analysis on Bitcoin, check out the prior two videos. I did quite a lot of analysis and predictions on Bitcoin. All right, let's move forward. We're going to go to Ethereum. All right, so Ethereum has been the one that has really been doing some craziness the last few days. Hang on, let me go to my actual ETH chart. I'm going to save the Bitcoin chart. We'll go to the ETH chart. Now, with Ethereum, I've basically done the same thing that you saw in the, who is that? We have Chicken Baggins just subscribed. Thank you. And you triggered that Elrond NFT. Nice. All right, cool. Thank you, Chicken. All right, so the next thing we're going to look at is Ethereum, and I'm going to get rid of the TD sequential for right now. We're going to get back to that. Okay, so we're looking at the 4-hour chart, and basically you'll see that I did something very similar with the Fibonacci retracement here. I gave it a local low. This is actually a local low starting on April the 7th up to the current high, which is sitting right at the top of this at around 3,340 roughly. Okay, so what we're seeing with this is pretty interesting. First of all, Ethereum has not had any corrective measures yet. Nothing, no corrections. This has just been a straight burst up of massive proportions. I mean, the burst literally started here, and it has gone up about 50%. That is since April the 25th. All right, from April the 25th to now, that is not a long time. It has gone up about 50%. That is a huge gain for Ethereum, and usually after a gain like this, you're going to expect some kind of a correction. Now, as far as where that correction is going to come from, I'm not 100% sure, but I'm going to give you a couple of my predictions. Now, this Fibonacci is just based off current data, right? So based off current data, a significant retracement here could go all the way back down to around 2,425 to about 2420 to 2466. Okay, so it's a pretty small range. And it makes sense, you know, we hit a top there once, we broke through it and fell back down again, and then we hit some, you know, we hit slight resistance, flipped to support on the way up before this run. So it has been a pretty great thing. And we have Alistar has gifted 2 subs to viewers here on Twitch. Thank you, Alistar. That's awesome, dude. All right, so the next thing that we're going to look at is where do we see potential downside targets, and then I'm going to give you my thought on where we might see a top if 3,300 does not become a top. So basically what I'm looking at for downside is first the moving averages. If this stays insanely bullish, then coming back down to around 2980 to 3000 is possible, right? That also fits with this Fibonacci level we're looking at right now. So that would mean, you know, a retracement like this, you know, coming back down to around where this blue moving average is. That's our 20 exponential moving average on this 4-hour chart. That's a possibility. We can also hit all the way down to the around $2,600 mark, which is where the 100 exponential moving average sits. So that's another possibility. There's no guarantee on any of these yet. Ethereum's in a blue sky breakout. You can't really predict a blue sky breakout. Anyone who tells you Ethereum's just going to keep running forever, they're wrong. Anyone who tells you that Ethereum's going to crash to zero, they're wrong. The fact of the matter is you can't know exactly where it's going to go. TA is never 100% accurate. It never is. I'll be the first to tell you that. I like to do it because TA is a tool, right? It gives me some information that I may not have had otherwise. And I can use that information, right or wrong, to try to make some decisions and hopefully help me with my risk management. So what I would do here, if you're looking to buy Ethereum, my option would be more than likely to put your lowest buy orders at around 2,400. 2,400, maybe even anywhere from 24 to 2,500. That's a better range. Now, basically, if Ethereum was to drop from there, that's about a 30% drop, 27%. That's fairly reasonable after a run like this once the asset turns bearish, right? It's not going to just have bullish momentum forever. At a certain point in time, people are going to take profits and you're going to see some red candles starting to appear. And as that consolidation occurs, it may take a week, it may take 2 weeks, but it will consolidate. I personally think that it may actually not even come down to this level. So even though the Fibonacci tells us this is based off of the current top, right? I don't know if this is going to top out here. I think it could just go sideways and come down a little bit to like 3K or even 3,200 and then keep moving up, kind of like we've seen throughout this run as it was setting new highs over the last week. Now, if this continues to happen, basically what I'd be looking at is somewhere around 35K to be the top. And there's a reason for that. So let's go into the coordinates for this fib. And I'm going to set the number 2 price to 3,500 so we can take a look at what happens if we extend this. So if we extend this out, so the top is 3,500, look at where the golden pocket comes. The golden pocket now is between 24.78 and 25.28. It's a little bit higher than before, but this is starting to look slightly better as a range for us to come back. Because think about where we're hitting if this price were to drop and come back here. Basically, let's take a look like this. Let's say that it starts consolidating and you start to see the moving averages go like this, right? The moving averages start turning this way, okay? So if this starts to happen and we start having some sideways trading with Ethereum, the next thing we could see is the price coming down all the way to around this level, which touches the red moving average. If this happens, keep in mind, this is a complete prediction. The other thing to note is on this 4-hour chart, you also see that ETH is pretty overextended on the RSI, right? The RSI is starting to reach at about the 85 level, and it has corrected at these levels a number of times. If this was to occur and we hit 3,500 as a top, so this would actually get extended, right? The price would go up here and then it would start dropping. If it does drop like this, then we're coming back and touching the exact points that we need to touch. And if we hit this area and get support here and then start another run up, you start to see that the chart looks much, much better. It's not a complete parabolic shift up. It is a shift up, profit taking, followed by another shift up. This makes sense. This would be a logical point of, what may occur. In order for this to happen, though, we would have to see the price move up to around 3,500 within the next couple of days. If it just breaks through 3,500 and hits 3,800, 3,900, then we're going to have to redo the fib because I don't think that you're going to see, a 40, 50% correction with Ethereum. I think it's unlikely because I think a lot of people buying Ethereum are not buying it for short-term gains. I think a lot of people investing in Ethereum are investing for the long term. They're seeing it as a project with a lot of possibility. That's why I started investing. I started buying Ethereum at like $145 to $250, right? That's when I started, and I kept dollar cost averaging all the way through. Now, if I could see that back then, and I have a background in like IT infrastructure and development and all that kind of stuff, there's a lot of other people that are going to be seeing this and they're going to have much deeper pockets. And if they're putting their money into Ethereum, they're probably not going to sell. I'm also assuming that a lot of people have been buying Grayscale's Ethereum Trust now. They've probably been buying the Ethereum Trust on in the stock market, and they're probably having private investors contact them and tell them they want to buy into their Ethereum Trust. If that happens, you will likely see Grayscale be buying a lot more Ethereum. And if that does happen, it may account for some of this price fluctuation if Grayscale came in and just bought a ton of Ethereum because they had more liquidity coming in. So that's another possibility. Keep it in mind. But right now, I would say 24 to 2,500 is a good range to put in buy orders, and you may need to hold those there for a couple of weeks if the price drops. It may not drop at all, right? This could be a great time to buy. If Ethereum just keeps rising up to 4,000 and then corrects back to 3,500, then right now is a great time to buy. But I'm just going off of what I have right now. Based on the data I have right now, this makes sense. So we'll keep looking at it. We'll get back to Ethereum the next time, but right now it is incredibly bullish, and it would not shock me if we see a little bit of downside, some sideways trading, and then we keep moving up and hit the top at this 3,500 level. For right now, since this is just a prediction, I'm actually going to move this Fibonacci retracement back into place at the top, so we can look at the actual golden pocket as it sits today, and we have a better idea when you look at the chart. Keep in mind, the Ethereum chart is available. If you're watching on YouTube, check the description below, and you will see the link to the charts. Just scroll down until you see the chart links. For anyone watching on Twitch, if you want to check out the charts, just go to my YouTube channel, check any of the videos. You'll see the charts link at the bottom in the description, or wait for this video to come out later today, and you can watch it again. Okay, so basically, this is what we're looking at for Ethereum. The main thing to keep in mind here is that positive price momentum does not last forever. If we also go to the daily chart for Ethereum, we are seeing something very interesting happening on the daily. So take a look at the daily chart and you'll see that we are starting to get overextended to about the 80 level. But the last time we had a major overextension, the price did run the RSI almost up to the 90 level. So if it does keep moving to that degree again, there is still some room to move. But pretty much the 90 level is where it's corrected every time. So it does give it some more room. We'll see how it goes. Agent JLS, thank you for following on Twitch, man. I appreciate it. All right, so the next thing we are going to see is we are going to see the TD sequential. Okay, so let's take a look at that. If you look at the TD sequential here, one thing that you'll notice is that the TD sequential on the Ethereum chart is flashing a green 8. Now, if we continue to trade in this range here over the next few hours, the daily chart is going to reset now in about 4 hours, right? So the next daily candle will start in about 4 hours. So if for the next 4 hours we keep trading in this range and this closes as an 8, then what we may see is that rise up to 3,500, or maybe a little bit higher than that, 3,550 or whatever the top becomes. And then if the price closes in that range tomorrow, you'll see a green 9 on the TD sequential. That could be an indication that the price is going to dip. Now, I'm not going to tell you it's 100% because look what happened here. Here we saw a green 9, and then the price just consolidated right after that, barely any. It went from around 2150 down to 1987, and then flipped again on the daily and kept moving. There have also been times that we have seen that green 8, and then we've had a consolidation right after that, and then we keep consolidating and moving. So we really need to see, this is kind of a key area, either today or tomorrow, something's gonna have to happen. And if over the next 3 days, it just continues rising and starts hitting let's say 4,000, then basically what you're gonna see is you're gonna see a green 9 on the TD sequential, and you're gonna start to see it get overextended. So at that point, we're definitely gonna be expecting some type of correction. It doesn't even have to be all the way back down to here. It could just be sideways, and then it could just consolidate in a very narrow range. It depends how many people are going to be wanting to buy, how many people are going to be wanting to sell. There's going to be a lot of new people getting into Ethereum now. Let's take a look at Google Trends real quick. Hang on, trends.google.com. All right, so if we look at Google Trends and we type in Ethereum, all right, take a look at this data for the past 12 months. One thing to keep in mind is in these last 12 months, we are now almost at the Google interest that is 92% of the max in the last year. So this usually is followed by some type of dip as it starts getting up to this 100% level. We've seen it here. We saw it again here as interest really went up. We're starting to see it again here. So if you want to use this as an indicator for the top, we could be close right now. So 3,500 is not out of the question, but it might even just start correcting from where it is now. We don't know for sure. We have to see, how does this go? Does this keep moving up? Does it change? Interest on Google is very important because you start to see a correlation between the Google Trends data and the price data. The more people looking up Ethereum, the more people tend to go online into their Coinbase account or PayPal or whatever it is and start buying Ethereum. So if this starts dropping, the price will likely correct with it. So keep that in mind. We're going to look at this again for EGLD in a minute. All right, that's pretty much it for Ethereum. Right now, I would just say Ethereum's at a critical point. You know, I've already had a few friends contact me today and ask me if this is a good time to buy Ethereum. And I told them what I'm going to tell you. I would probably either do one of two things. I would either wait to see if there's a dip, or I would dollar cost average. So I told my friends, if you want to put in a little bit of money into Ethereum, a good strategy might be to decide how much you want to put in, like what that total amount is, and then buy like 10% of that, right? And then hold the rest of your money in liquidity. Keep it in cash or a stable coin or whatever. And then if you start to see Ethereum correct, just keep putting in 10% and buying the dips on the way down and hold like a good 20, 30% until you feel it's hit a bottom. If that doesn't happen and it keeps going up, you can always dollar cost average in, even though you'll end up getting at a higher price. You know, it's unfortunate. There's a catch-22. You could end up, you know, kind of getting screwed and having a higher price, or you could end up maintaining liquidity and waiting for some people to take profits and then buying. So you got to figure out that strategy. I always like dollar cost averaging. I think the long term, it works out pretty well. And I think after this run, it might be helpful. Marcia Sent, thank you for following on Twitch. I appreciate it. All right, so that's pretty much it for Ethereum. Overall, it's looking great, but I would expect to see some kind of correction happen at some point. The golden pocket level looks pretty legit at around 2,500 because even if you look at the volume profile on the right-hand side, that is really where the support starts. So if we start to drop, we'll likely see some support at around 27, and then we'll likely see support start at around 25 to 26. If we dip below that, there's going to be massive support at 24, and that's exactly where our golden pocket is. So, you know, that's pretty much Ethereum. I think these are pretty standard strategies, but it's good to see in chart form, and it's good to see it validated if this is what you were thinking. So keep it in mind. We'll get back to Ethereum again in a couple of days, and we'll see how it's moving. I'm hoping that we see a reversal back to around 24 so we can have some people take profits and not get too overextended, because then we might just see a huge drop. And at that time, a lot of people can get scared and say, oh, I should have never bought. People take heavy losses. It's never good. It's better to see people taking profits than seeing people take losses. Okay, so that's pretty much it for Ethereum. Let's move on to EGLD. All right, we're going to save the ETH chart, and we're going to move to EGLD. Now with EGLD, very similar. I've done a Fibonacci here, and this Fibonacci retracement, I've added the golden pocket now to everything that I'm looking at, because I think it's very important to start watching these golden pockets because they've been very accurate. So, and even historically, if you go historically, I always use this on my own analysis, but I'd never included it on my charts for the videos, so I figured it was time. You go back to old chart performance and you start charting out your fibs like this, you'll start to see that the golden pocket tends to be a very critical range a lot. So the golden pocket is here in blue for EGLD. That is about the 145 to 150 level. The interesting thing is that that is right on top of where our support is, so it fits perfectly. The odds of us going back down to the golden pocket for EGLD seem somewhat slim right now, but just like Ethereum, on the daily chart here, we are seeing an 8 flash. Okay, it's a green 8. If we start to see that green 9, we might have a correction. Now, keep in mind, this is what happened the last time we saw green 9. All right, I'll show you the last couple of times we saw green 9 on EGLD's daily chart. All right, so we saw green 9 here. All right, what happened? The price kept running up. It got overextended, and then it dropped. It hit that golden pocket area, and it reversed. Here, we saw another green 9. What happened after this green 9? Slight run up, went down, reversed. So it is fairly accurate. Okay, you go back down here. This is another bigger example. Saw green 9. Price took a massive rise. This green 9 showed up at around 60. So honestly, if you sold at this green 9, that would have been a crappy time to sell. So these indicators don't always work. But in this scenario, you saw the price get super overextended and it did drop. So in reality, this was, you know, accurate to some degree. But I wouldn't necessarily call this the most accurate indicator in this scenario. In these scenarios, during these consolidations, it was much more accurate. The question is, do you think that EGLD is going to have a massive, massive pump like it did this time? Or do you think it's going to move on a more structured basis now since there's more investors in and there's a lot of people staking? I think it's more likely that EGLD starts becoming a little bit more structured and the bursts are followed by slight consolidations. I don't necessarily want to see a massive, massive $400 or $500 move up. because that's going to be followed by a correction. A lot of people are going to buy and they're going to lose a lot. So seeing it move up slowly and structured is good. It gives a lot of us opportunity to accumulate more over time as we get our paychecks and things like that. If we decide to keep accumulating, we can. Once it jumps up to 400 or 500, it's a little more difficult. Okay, Irk, thank you, man. I appreciate you following. All right. Now, the next thing that I would say for eGold that you really, really want to keep in mind is that if it does drop to this 145 to 150 level, it may be short-lived. So even if you place an order here and you go below to 140, it might not hit. I mean, we have seen that this blue moving average, this is the 100 exponential, on the daily chart, it's barely been touched. It's only been touched a few times throughout this entire run. At this point, I'm starting to think it's unlikely that it'll go back down and touch this blue moving average. And if that's the case, it may not even hit the golden pocket here, right? We might have to look at an even shorter term local low, right? Maybe this one here in March. So let's move the Fibonacci and see what happens to our golden pocket if we choose a higher local low. Okay, because that might give us a better indication of targets. Because keep in mind, right now with eGold, you're also seeing a couple of interesting things here in the bottom of the chart. You're starting to see that the MACD looks like it's flipping. It looks like it's flipping at the 0 level into a bullish cross. You also see that, and this is the daily chart. On the daily chart, you also see that the RSI is sitting at 55. These are great conditions for positive price momentum. Now, you also see that the volume has been significantly trending down. As that burst of volume comes in, seeing the price move up drastically could happen. But at this point, a drastic move for me is saying that, eGold may pump all the way up to 300 or 320. I'm not looking for it to go much further than that because I want it to consolidate and do well. Nixter9, thank you for following, man. I appreciate it. All right, so the other thing that we see here too is, okay, so what I wanted to show you is this, right? We extend this golden pocket, or we extend this Fibonacci to another local low. We keep our high the same. Now we start to see a new golden pocket emerge, and this is between 160 and 165. This seems to make a little bit more sense because in this area, we not only hit support on the way down, we fell through it a little bit, but then we hit a slight resistance for a very short time. Remember, this is daily, right? You go into 4 hours and you can start seeing the amount of activity that happened in this area, right? It was support, it was support, it was support. Now flip to resistance. Resistance again, flip to support. So this area did have a lot of activity. You go back here, we broke above it and it hit major support on this range on the way up. When we went up from 135 all the way back to around 240, that was a point of major support. So seeing this area act as a bounce would be very, very likely. I would like to see it play out like this because on the 4-hour chart, this makes a lot of sense based on the amount of trading activity we saw in this little range. So I'm going to go back to the daily now. I wanted to show you the amount of activity you had there. When you look at it on the daily, basically, you tell me, all right, I'm going to draw this out a little bit. You tell me if it seems to make sense. Let's say that eGold has a slight run up here, and then it consolidates a bit. Maybe it goes up and down, comes back within a couple of weeks and touches this 162 level, and then bounces up from here, right? If you see something like that on the chart, this not only makes sense over a time frame, but this also makes sense for price discovery, right? As this goes up, and you start having trading like this here, what's going to happen to the volume on the right-hand side? All right, let's focus on that for a minute. We'll zoom in. I didn't mean to move that. We'll zoom in. If you look at this, you're going to start having a lot more volume in this area, right? And here. This volume, and even down here, like this entire range, the volume will start looking like this, right? These gaps will start getting filled. Now, it may not take this long. This is what I would call the ideal scenario. Right? For anyone who's in this long term, this is the kind of growth you want to see, right? It kind of matches the growth that we've been seeing. You have consolidations, you have rises, and you steadily keep going up, right? That's a sustained move. Seeing sustained moves is something I like. It's not something you always get. Sometimes you get parabolic moves, and we could potentially even see that. So I'm not going to say that's out of the question, but I would hope to see at least one more slight drop to about the 160, anywhere from 150 to 165, that level. If we get to see that, that would be really good. But I think 165 may be a good place for orders right now. It may not go much lower than that. I mean, I think there would have to be some bad news or a significant market correction in the overall crypto markets to start seeing drops further than that. And right now, all the staking providers are pretty much full. Elrond is soon enough going to take more foundational nodes offline. So a lot of the staking providers that are generating low APR or zero APR, their APR is going to start increasing. You're going to see more people wanting to stake as they start seeing this. More of the providers that have, zero APR over time and they're later in the queue for their nodes to go online, they're going to get more stakers. And the amount of value in staking is going to keep rising. About a month ago, the value in staking, the percentage of EGLD in staking was like 50% or 53%. Now it's like 63%. That's a huge rise. I mean, that means 60+% of the entire EGLD supply is being staked. It means the majority of the people that buy this asset are in it for the long term. That tells you something, right? Not a lot of assets are like that. There are a lot of people that even have Cardano and they just keep it on the exchange. You don't have as big of a percentage of people staking, but with EGLD, there's a huge percentage of people staking. And over time, that limited supply is really going to cause this asset to burst as its adoption increases, in my opinion. That's what I think. I could be wrong, so do your risk management, but I still think this is looking incredibly bullish. And honestly, even if we see something like this, it wouldn't shock me. We see a small dip back to 160, and then we just see a huge price appreciation all the way up to 340. You look at the chart, and even this is not surprising, right? This may come with a little bit bigger of a correction because percentage-wise, you could be looking for it to come back to the previous tops, which would be about a 30% correction, right? So moving from here all the way up to around 340 and then correcting back to 240, not out of the question at all. Usually when you have a huge jump like this, it's followed by a correction back to the previous top. So seeing this is very possible, and it could put, a very good trade in the works even at these current levels, right? If you put in a buy order now and then just put in a sell order at 340, you might make a decent profit and then be able to buy again when it comes back to 240, right? Over a long period of time, that may work out, but just speculation. Long time coming, I see EGLD being way higher than it is right now. So as long as the EGLD, the EGLD developers and the people running the company and blockchain continue to improve and hit their targets, hit their timelines, keep staking, performing well. I know there have been some issues with nodes and stuff, but that happens when you put a lot of new code into mainnet on anything into production. You have times where there are issues. Those issues need to be fixed. As those issues get fixed, everything starts becoming smoother. And I think once we see that everything is a little bit more streamlined in this whole process and Elrond is taking care of the issues that they want to take care of, we're going to start seeing them pull more foundational nodes offline, and we're going to see stakers start generating more APR. And I think then the percentage staked is just going to keep rising. And eventually what I see happening with EGLD is something that's already happening. There are more people wanting to stake than there are staking providers available. And I think that's going to be a trend that continues. And eventually it's going to make this blockchain grow a lot more. It's going to bring a lot more adoption into it. And it's going to be seen as like a bridge of many different features. So there's a lot going on. I'll do another video on Elrond dedicated at some point in the near future. One other thing I wanted to show you is this. All right, so we look at the price right now of EGLD. EGLD is sitting at around the 193 level. It's flirting between 193 and 200. If we look at the Google trend data for the past 12 months for EGLD, the max it peaked was around February 7th through 13th, okay? That was at 100%, okay? So let's go back to February 3rd through the 17th. If you look here, you can see at the bottom of my screen, you can see the date, right? So February 3rd through the 17th was this area here, where we hit that peak, that major parabolic rise. We peaked out at around 240 roughly, then we started consolidating. It was this major consolidation. But right at this peak is where the Google Trends data peaked. Now we are sitting at almost, $192, but we're only at 45%, okay? So that means that there is a lot more room to move. The price is appreciating now without the Google Trends data backing it up. That means that the people that are buying eGold now are people that have already discovered it, that believe in the asset, and that think it'll continue to grow. You probably have a certain percentage that are just traders looking to make profits, so you got to account for them too. But what I'm saying here is that once eGold does rise again, and it does start bursting out, and we do start having more interest, you're going to see this value start to rise again. And as it starts reaching back to that 100 level, you might see something very similar to what you're seeing in Ethereum, which is a huge price increase over a short period of time. We don't know exactly when that's going to occur, but I'm keeping an eye on this. If I start seeing this Google trend data continuing to move up at a rapid rate, then I'm going to assume that the price is going to follow, because that means more people are starting to research this asset. I hope it takes some time. Honestly, I would love to see it drop and buy some more, but we'll see how it goes. That is pretty much it for eGold. We are going to wrap up today's video with Cardano. All right, how are we doing on time? Jeez, we're about 45 minutes, 40 minutes. Craziness. Okay, so with Cardano, we have the same thing. We have a golden pocket. The golden pocket is sitting at about $1, which is expected. It's also at the 100 exponential moving average on the daily. Cardano is doing what it's been doing. It's staying very, very stable. It is consolidating sideways. I don't know exactly when we're going to see the rise for Cardano, but the way that I see it now, there does seem to be a lot of people that want to see this project succeed and are staking and are getting more involved in it. So I think it's coming, but I don't know when. The chart is not really telling us that. The only thing that we are noticing on the chart now is that the moving averages are starting to get constricted again. They're not quite there. So it could keep going like this for another month possibly until it breaks out. But I tend to think it'll be sooner than that, because right now the volume that's being set at this $1.20 level is basically the same amount of volume, or close to the amount of volume that we saw being set at the 35-cent level. So the same amount of people, or the same amount of Cardano is being traded at this level. Not exactly the same. It's still, this level is still a little higher, but this is getting there. So as this continues to grow and go sideways, the support level is getting massive. So the way I see it is, once Cardano breaks out of this area, it's going to be unlikely that it's going to drop back down. We will likely start setting a new support level in a little bit higher, probably at this top at around $1.50. But in order for that to happen, we got to see how long is it going to trade sideways and how long is it going to take to break out. Getting a timeline on this is very, very difficult, because Cardano has only done really two things. If you look at the price history in the past, right? It has consolidated for a long period and then bursted. So consolidated for a somewhat long period, bursted. And now it's consolidating for a somewhat long period. Eventually it's going to burst. Dear Martin, thank you for following. I appreciate it. All right, so that's pretty much it for Cardano. I wish I could give you some more for Cardano, but unfortunately, without much activity on the chart, there's really not much I can tell you. All I can say is that the chart looks good, right? We have decent targets. The 100 exponential moving average is sitting right at the golden pocket. So seeing another drop to $1 would, in a bull market, when you see a drop to the golden pocket, in a bullish chart, it's an indication of major price movement. It would tell us that the price is about to start reversing very high. Jeffrey 4101, thank you, man, for following. 4101, yeah, thank you for following. So I would keep an eye on that. If you want to buy any Cardano, I would say that a good bet is anywhere between $1 and $1.10. You may get those prices again. It's possible, but if it keeps trending up and follows the current trend line, it might not drop below $1.15. So it could be a risk to put in orders at that level. You might just have liquidity sitting around that doesn't get triggered. It's really up to you. You got to decide what's best. I still think that even this range at $1.24, once we flip this range into pure support, we are going to see that movement up. So if I extend this out, basically what you want to see is you want to see the price of Cardano coming down and not dropping below this gray box here. If it stays above that gray box, then that means that the price is getting ready to move up. Right now, it has not done that. Every time it's gone above that box, it has come back down. So on the daily chart, this is the longest we have really been above that in a sustained move. This move here wasn't necessarily sustained, right? It dove up and then flagged down. This one's going up much more steady. So this could be the time it actually stays above this line. And if it does flip and come back and turn that into support, that would be really good too, because at that point, it would basically be bouncing off the 20 exponential moving average, which is also a very bullish sign. Every time you see that, the price does tend to move up. You saw it here. You kind of even saw it in these areas where it dropped below that moving average. So keep it in mind. Cardano, very stable. I mean, honestly, it's been like a stable coin for some time, but we'll see what happens. I mean, right now, I'm not changing anything with my Cardano investment. I've been staking it since 10 cents, and I'm going to keep doing that. But I'm very curious to see where it goes. So we'll see what happens. All right, that is about it for the YouTube video. For anyone who enjoyed this, make sure that you like, make sure you subscribe, give me your feedback in the comments. Follow me on Twitter and Twitch. All these videos are live streamed on Twitch, so if you want to see them live instead of a couple of hours delayed, because it takes time to get the videos uploaded to YouTube, make sure you come and follow me on Twitch. And thank you, Andre Toma, for following. I appreciate you. And you'll get a little shout out if you decide to follow or subscribe while I'm recording this video. So I'll catch you guys next time. I appreciate you. Trade safely, and good luck. Thank you for joining me. Peace.